All right, traders, we're going to get started. I'm Steve Dahl, president of Tazz Market Profile, and thank you for joining me here on this beautiful Friday. I'm coming to you live here from San Jose, which, as many of you know, I did this presentation a couple days ago from Sacramento. So on the go, but in a good place and excited for this encore. How many of you were in attendance a couple days ago and you wanted to take another look at the presentation today? How many, by a show of, I guess, whys or yippity-doo-dahs or yee-haws, depending on what state you're from? All right, good. Some returning folks here today. Wonderful. Many of you are already taking advantage of some of the tools. Well, let's get right into it here. This presentation is called Market Profile in Minutes. It's because it's my job that at the end of this presentation, I've done a good job of introducing you to a simple, clear, and actionable way to deploy Market Profile, which I think a lot of folks find intimidating because it's been around a long time, since the 1980s, as many of you know, in a lot of different forms. And as you'll soon see, it doesn't need to be as complicated as many folks make Market Profile. And that's really my objective here today. And of course, I have a heck of a good deal for you. So hang around to the very end. Let's keep moving along here. I always like to make a joke that it's the folks that designed these slides here probably gave me too much benefit of the doubt by putting the brightest bulb above my head. But I do know a little bit about Market Profile. I'm a 16-year user of the method and tools that you're going to learn about here today. We'll leave it at that. So let's go move along. Here's the risk disclaimer. In a nutshell, this just says there's a risk of loss associated with trading, and anything I say, show you, or we do today is simply for academic purposes, but you and I both know that this is about empowering you with knowledge so that you can, in fact, go on and find some opportunities for yourself, but please do so responsibly. Okay, we're going to go through just a few slides, and if you're like me, you're not much of a PowerPoint person, so I have a very limited number of slides here. This is really just to kind of set the stage for us diving in during live markets. We have here this go around with the product that I'm really excited to show you. So I'm going to talk to you a little bit about how professional traders leverage Tazz Market Profile. Bank traders, hedge funds, advisors, prop traders, and brokers use the method and the tools that you're going to learn about here today. Many of you probably have seen us on Bloomberg, and in fact that's an office with my partner John Logan out in the Bloomberg Hong Kong office with a very, of course, attentive audience out there. A couple other things here. This is yours truly, and I think the big message that I want you to know here is it's not just for the pros like a lot of you may suspect. It's actually for everyday traders like you, independents, those that are trying to work their way out of a cubicle and maybe get some of that trading time freedom, or maybe you're looking for supplemental income, or you're just looking to take on the challenges of the markets and be a better position to play both the long and the short side. Market Profile is not just for the pros. Those are some pictures of yours truly in a variety of venues. I spent a great deal of time, as you can see in this image here. I was out in Silicon Valley. I'm actually not too far from there as we speak here. That's Sunnyvale, in front of an active group of traders eager to learn Market Profile just like you. This is actually a new slide here. I was out at Walt Disney World the end of February presenting to, again, a very large group of folks in the beautiful conference room there, and teaching what I'm going to show you here today. I show this to you for one simple reason, because it's probably, some of you are saying, what does this have to do with me? I want to show you this because it's important you realize that Tazz Market Profile is going above and beyond than what a lot of other folks out there are doing that are solely hiding behind the screen, that are not getting out, touching and feeling their customers and teaching them what trading the Tazz Market Profile way is all about. We are out there, and as you can see, again, I'm out west, even though I call Chicago home. I'm doing the same here over the last several days. And then I'm off to New York City, actually, as it turns out, tomorrow morning. So I've been busy. There's a lot of platform integrations that are available when you get into some of our other products. You can see some very familiar names up there: Bloomberg, Thinkorswim, eSignal, TradeStation, Sierra, Gain, Ninja, Trade Navigator, MetaTrader. Now this has to do with our charting suite, which does require a host platform, but guess what? What I'm going to show you here today does not require any of those platforms. So although we appreciate those integrations, we're going to keep it real simple here today, and we're going to show you something that is one of our favorite products that gives you everything you need wrapped up into a standalone package. No data feed. You don't need a platform. All you need is a 60-second download, and away you go. All right, let's dive into the difference between Market Profile and some other market metrics, okay? Everybody should be able to see my screen here. It has kind of like an iceberg pyramid here, and we're going to start off by looking at the top left, where we're going to talk about the market metric price action, okay? What does price action really tell us as traders? Well, I'm going to make a clap noise here, and hopefully I don't wake up my neighbors here in the hotel, but That's price action right there. Did you hear that? You're probably saying, don't do that again. That probably hurt your ears. I'll do it a little further away from the mic. That's price action, a moment in time. It's a snapshot, a Kodak moment, which is something my kids don't even know what it is. They don't know what a Kodak is. I know what it is. You do too. The reality is this. It's a moment in time. It provides a moment in time snapshot of where a buyer and a seller agree to do business. Like any transaction, when you buy gas, when you buy a car, you are essentially doing the auction market. You don't realize it, but you are agreeing to buy gas for probably too much if you buy it in Chicago, LA, or New York City. But you're agreeing that, hey, that's fair. For what I need, you've got something, you're willing to sell it for me. It's a moment in time. Okay, that's what I want your big takeaway to be. Price action, as you look at it on your charts and you look at it on your screen, it's in many respects kind of a fleeting moment because it has no bearing on where that next meeting of the mind is going to be. Now, when we dive a little bit deeper into the pyramid here, you'll see the middle section is volume. How many, by typing in the chat box here that are in attendance live, use volume on their chart? How many have volume on the chart, the bottom of their chart? Type Y. There it is. There's all the Y's. Probably most of you. Okay, and me too. Volume gives us a history of liquidity over a period of time, and as you'll soon see, essentially what that does with volume is those histogram bars get taller when there's more activity, so we get a visual cue in a graph, right, that tells us when there's a lot of activity over a period of time, and that's why it's in capital text there. Okay, that's the big thing you're going to distinguish here. Volume gives you a history of liquidity over a period of time. Unfortunately, that's about where it ends, okay? And so what I'm going to introduce you to today is market profile, which gives you a factual landscape of how much relative volume has aggregated and at what specific prices. You say, big deal, Steve. Isn't just knowing how, where market liquidity is, isn't that just enough? Well, you'll soon see absolutely not. As a trader, when you enter the market, but long or short, you can't just say, hey, I want to get long or I want to get short and, hey, you guys just tell me what price. No, you have to tell the market when and specifically what price you want to do this at. Okay, you can't, well, I don't think you'd even want to put kind of an ambiguous, sure, just buy me whenever you want today, sometime throughout the day. Of course not. That's ludicrous. So we're going to move along to help you understand why it's important to know where those specific prices and activity levels are. Here's the normal distribution curve. Many of you familiar with this, I'm sure. Type a Y in the chat box if you are familiar with this. So what we're looking at here is a normal distribution curve, or the bell-shaped curve here. And the green area that you see there, that's the area where approximately 70% of the activity is occurring. In fact, 68.3 to be exact for those of you that are stat geeks. And it's important that we have an awareness of what we call that first standard deviation. Because when we make decisions as traders, do we want to make it based upon the least amount of data or the most amount of data? You think about decisions you make in your everyday life. What is more reliable, to take a poll of 3 people and take in that input on any topic or question that you want to ask on the street, and then get that data and say, you know what, we've got 3 data points, and you know what, I think I'm going to go with what interviewee number 2 and 3 said, because 66% of the people agreed. No. We want more data. The more data, the absolute better. That's exactly what we want. The more, the better when it comes to data. And I'm going to show you how we gather that data in market profile world and make decisions on it. In the distribution curve here, you see as you get further away, second, third standard deviations, less and less of the data it falls within those constructs, okay? So let's talk a little bit about this. This is price over time. This is what a kind of a generic or academic chart looks like. The market starts at point A, it goes to point B, back and forth. This is normal ebb and flow in the market, and you can see the arrow down at the bottom says this is what happens over time. Okay, this is what happens over time. Markets go up, they go down, and we observe that over a period of time. But if we're going to look to profile trading data, what we need to do is we need to plot price and volume in this format And then we need to reveal a relative frequency of volume. And this is our very first step to determine probability of outcome. And that's why when you look at this chart over here, if you follow my cursor, this is, again, kind of a generic chart showing you that the tallest bars is where the most amount of activity is occurring. As you get around the perimeter there, you can see the least amount of activity is occurring at those corresponding prices. But those of you that, of course, are familiar with charts know that this is not what our charts look like. So I'm going to do something here that's going to be the big profound difference in market profile. We're going to take that and we're going to flip it sideways. So this is that big change from just taking volume as a vertical histogram at the bottom of your chart, and we're going to flip it sideways, and then now we're going to identify some very specific areas here, okay? So up above this red line, this is going to exemplify one of the upper band of the first standard deviation. Okay, so we're talking about that green zone. Remember that meaty part of the bell-shaped curve that has about 70% of the volume right here. Now you could see it saying 53. Okay, it doesn't matter. This is, again, just for example purposes right there. Okay, so this is 53. That's the upper band of price that's still within the most popular 70% zone. Down below, around 43. Down here, the green line, that's the lower band of activity. And in between, this is where, if you were to aggregate it all together, that's where your 68.3% is going to be falling. This is the area that we call the value area, and it's considered to be the fair auction, okay? It means that buyers and sellers, much like kind of an MSRP when you buy a car, if you buy it within those certain range of prices that the Edmunds Guide or the Kelley Blue Book tells you, you feel pretty good about the deal that you got, okay? Down below that green area we call the demand area. We also call this, up above the red line, the supply area. In between is the point of control. Okay, we're going to talk a little bit more about that later. When we get outside of these levels, look what happens to the frequency. It becomes less and less and less. So we call those extremes, and those are low data point zones. Okay, follow along. We're making progress, and we're getting one step closer to live markets. This is one of my favorite slides, and it is an important one. This is the anatomy of market profile. So we're going to talk a little bit about how we get from a regular price bar into market profile, because it's important that you understand this before we go into the utilities and tools that we have to show you here today. So classic market profile organizes data using letters, as you'll soon see. So this, we're going to focus our attention right here, okay? In this example, again, we're looking at 30-minute bars data, but it should be important that you note that you can apply this method to any time frame, long-term trend following on weekly and dailies, all the way down to active day trading 1 and 3-minute charts, Renko charts, tick charts, whatever it is that you want that generates the velocity of trading you prefer. You also can use this on any market and time frame, okay? So stocks, ETFs, futures, and forex. So this is what your typical price bar looks like. Markets going up and down, you get the range of these bars, so be it. Okay, this is what most of you are looking at now. What we do in market profile world, and this is compliments of Pete Stoudemire, who put this together back in the 1980s, kudos to him, we started organizing data by assigning a letter to it. So it's the same data as you see on the left, but now you can see we assign B, C, D, E, F, and so forth. And what we do, and this is important, when we move over to the third image here, we call this a collapsed TPO, time price opportunity. These arrows that you can see here, green arrows, are essentially taking all those letters and we smush them left. Okay, so we got a nice flat left edge, and what this allows us to do is kind of like building blocks. We get to now instantly see something that was not so apparent before. What is the price? I'm going to ask you a question, a little pop quiz here from Trader Steve. What is the price that you see here that has the greatest amount of activity? Where is the price that in this particular chart people agree on the most? Whole bunch of 1072s coming at me. That's awesome. Probably 50 of you replied. 1072. So I'm going to highlight that right here. And look at how easy it was to see that. Now, if I were to ask you that before, right here, would you even be able to answer that question? I'm not going to say it would not be possible, but it certainly would be a painstaking task to aggregate all of those activity points, go in and pull time and sales and look at all that stuff on a spreadsheet. Why? You don't need to, because with market profile, we do it for you. You can quickly and easily see that this is the most popular price at 1072. So big brownie point for all of you that got that right and responded. All right, we're making some great progress. We're one step closer to live markets. All right, so really when it comes to trading, your decisions are actually a lot fewer and far between than you may think. you know, a lot of times when we're retail traders and we look for opportunities in the markets, we turn on our computer and we kind of go, oh boy, where do we start? There's so much going on. There's so many movement. This charting platform is blinking at me. My broker platform is blinking at me, and there's so much information that I think we all can agree we live in a world of instant gratification and sensory overload. We don't want more noise. We want the right information, okay? We don't want just more information because that creates more noise, and we get further and further away from the information that helps us find opportunities. Okay, so really trading, if you think about it on this slide, is really you determining whether the market is in balance or out of balance. So in a single time frame context, again, this could be any market in any time frame, markets are one or the other, either balanced, and we're going to call balanced inside that value area. We call it in the value area or balance when we're below the red line and above the green. Remember, coming back to my chart moments ago? So when you're in that 70% zone, you're in the area where 70% of the people say, hey, this is a fair place to do business. Let's just stay comfortably right here. So what do you expect markets are going to do during that time? When markets are in those balanced areas and they're in that time dimension, you can see we actually go sideways. Time continues to pass, but the market really doesn't go anywhere. And that's why you see, again, time is passing and the market is just staying comfortably inside that fair auction. Buyers and sellers are agreeing on price. They're hitting the buy and the sell button about the same place on both sides, and that's what sends markets this way. These are going to be your challenging markets to trade, right? Now, contrary to that, when markets are imbalanced or out of balance, they can't be in an uptrend and a downtrend. So the beautiful thing is that you really have one decision to make first, which is this market in balance or is this market out of balance? And if it's the latter, the market's out of balance, you have one of two ways to split the hair. It's either an uptrend or it's a downtrend, and that's going to give you the cues to know what side of the market to trade. It's really refreshing. When I first saw this slide presented to me, I said, gosh, this just kind of makes it, hey, I said, why didn't I see this slide much sooner in my trading career? But it made me feel great to know that really trading is about making a kind of a binary decision, either or, and then if it's either or. I've got two things to decide on every chart, and I can do that very quickly, as you'll soon see. So your success as a trader is really contingent on you being able to accurately differentiate between the dominant phases of markets, and it's your job to adjust your trading style to match. That's important to realize, because I think a lot of us are maybe kind of hardwired to trade a certain way because maybe we took a course or we learned something from somebody and we just took a liking to it. And there's a lot of problems with that if you think about it. If you are going to start each day and you're going to trade every day the exact same, you're going to leave your success to one simple factor. What do you think is going to dictate whether you make or lose money every single day? And it's totally out of your control. Well, it's whether the market is going to be cooperative with the style of trading that you have already decided you're going to do regardless. Think about how kind of ridiculous that is. Do you think the New York Stock Exchange, do you think the NASDAQ, do you think the Chicago Mercantile Exchange and the CBOT and all these exchanges all over the globe that you trade and you're connected to through your platforms, do you think that they care about your preferences on when and how you want to make your money in your trading style? Well, I got news for you. They don't. I was a broker for 15 years at one of the busiest commodity brokerage firms in Chicago. And I will tell you, the markets do not care about what your preferences are. You are anonymous. You are a fly on the elephant's rear, and I mean that in the nicest possible way. And you'll soon see that actually that's a good thing for you as a retail trader. You do have some edge over the pros, contrary to probably what you might think. So here's what we've done in Market Profile World. We've really aimed to simplify Market Profile with TAS levels. Now we call these boxes, okay, because it's those same 3 lines we talked about earlier in the presentation. Let me grab my cursor, and the rules are really simple, okay? So again, we talked about this red line right here being what we call the high value area, or we call HVA, okay? So I'm going to go like this, and this is in that box down the bottom right, the key there as well. So that's the supply area. Okay, down below we call low value area. That's the green line right there. Okay, all right, and this is just an Acme chart. All right, and then this in the middle is called the POC. The POC is the most frequently recurring price. So you can call it the mode, M-O-D-E, the mode of the statistics. So when you gather up data as a market statistician, you put all the data in a bucket, and then you take note of different ways. The mean, median, mode, right? Everyone probably knows that. The mode is the most frequently recurring price. If everyone keeps agreeing at $85 on Acme stock, that's going to be your POC, your point of control. So here's what you need to know. It's really simple. With TAS levels, instead of you having to kind of trip over the alphabet in the dinosaur version of market profile, instead, because you know that we're pros at what we do, and we're on Bloomberg and Thinkorswim and all these great platforms that have been around a long time for a reason, you say, Tazz, do it for me, because my time is valuable. So we do. We just give you the value area with these simple lines here, okay? So the rule of engagement is really simple. Let's go back on this chart over here. When the market breaks above the top red line, or we break above the fair auction, what do you think? What side of the market do you think we need to trade? We trade long, baby, long, okay? So the first decision you make is, if you were on the short side, as you see previously here in this Acme chart, you would no longer be short. So you cover your shorts, and now you start getting long because we've closed above that high value area. This is an example that it's gonna mean a lot more when I bring up some live markets for you here today, okay? This is, I know, a static chart, but I'm a huge fan of showing you a proof of concept in live markets, and I'm afforded that opportunity since markets are rocking here today, okay? So be long when the market's above the top red line, the high value area, and just the opposite, be short when we have closes, like you see for this little stint down here, when the market closes down below the bottom green line, low value area. You trade in the direction of the breakout outside of the value area. I like to kind of call it like, think about summer camp. Anybody go to church summer camp like I did, or any kind of summer camp for that matter? Well, I did, and at the end, on the last day, they do the classic mud pit, and one side of the camp would do the tug of war, and the mud pit, the goal was to pull the people into the mud pit and laugh and whatever at them, and you were the big winner. So you can view this like a mud pit. The bulls are going to win that tug of war when we pull the bears across the mud pit, and just the opposite, like over here, when the bears pull the bulls across the mud pit, they're the big winners, and you want to side with the pull, okay? All right, there you go. Maybe an analogy that some of you can relate to, and others are probably scratching their head. Let's keep moving along, because this is where it gets interesting. So I'm going to show you this product. This is just a static screenshot of it. The product that we're introducing you here today requires no data feed, no host platform, none of these extra fees that we're so used to getting kind of nickeled and dimed with as traders, right? How many of you are sick of the fees? Every time I open up my brokerage statement, it's like, well, what's that mean? Some ambiguous title, itemized thing, tucked away, hoping I don't see it, and we have a decision. Well, do I call to figure out what it is, or do I just keep paying it? And probably most of us just keep paying it. Well, guess what? No extra fees for this platform. So what you see is all in a nice tight wrap box that we give to you. Okay, so I'm actually going to bring up two things here today, okay? So I'm going to start by bringing up a sample charting platform, okay? Now this is actually showing our indicators, which is not what we're introducing you to today, okay, to be clear. But I wanted to show you, I was looking at the SPY here, big picture, okay? This is e-signal for what it's worth. And again, this going back to September. And look what the market does here. If I keep going back, actually, look what the market does when we're breaking above those top red lines. Again, I just wanted to show you some live markets so that you certainly think that I'm just not cherry picking and showing you the best chart on my slide here. Again, this is a live market. Look at the market, for all practical purposes, every step of the way continues to move higher and higher and higher every time we get reaffirmation that we're closing above that fair auction. Remember, the bulls are pulling the bears across the camp mud pit. And you trade with long strategies only. If this is your time horizon, again, this is long-term trading here for daily. But look what happened here as we moved into, remember the big sell-off to start the year, right? In February here. Look at what the market's done. We have largely spent our time down below the bottom green line, down below the demand area. And these were some fantastic and small fortunes in terms of opportunities out there for the trader that was positioned properly. But notice how it helps us to, again, make that first decision. Are we in balance? Are we between the red and the green line, or are we out of balance? And if we're out of balance, remember, through Tazz, we know we want to trade in this direction. Powerful stuff. Okay, now this is where I like to engage you as an audience, okay, so that you really understand that, you know, this isn't some like little magic show I'm good at doing out of hotel rooms in San Jose. I eat, sleep, and breathe this stuff. I'm a 16-year user myself, and it's my mission to teach traders in person, online, in any venue I can, the message of market profile and how it can give you the clarity that you probably lack right now. So type in tickers and time frames, and I'm going to bring up some charts, okay? So type in some tickers. That's great. Type in tickers and timeframes. There we go. Here comes in some. So Facebook. Okay. So let me get rid of my drawing tools here, if I can. Hold on. There. There we go. Now I'm back. Okay. So let's take a look at Facebook. Okay. These are your charts, not mine. And this is what is important to me, that you understand that we don't make this stuff up. It works. Okay. So look at, you've been in breakdown mode here most recently since the early part of February when Facebook broke down below 183.92. That's almost $20 a share ago. Okay, you'd be in the short side. Some other ones coming in. Let's go look at gold. Okay, here's June gold. We're moving over into futures world. You can bring up 30-minute time frame. Sure. Okay, here's 30-minute. Okay, here's your 30-minute time frame. Okay, I'm going to zoom out a little bit here so you can see. And look, again, all I'm trying to have you do here, I'm not trying to give you recommendations here. I just want you to visually take in that what I taught you moments ago is true, not only academically, but in real markets. Look at the markets down below our low value area green lines, and the market goes down, down, down. And not every move is going to be these humongous moves. Now, it's great when we get $30, $40, $50 moves in gold. Those are obviously some fantastic moves. But look, sometimes the moves are a little breakout mode to the upside. Here's actually a loser, and I think it's important to talk about losers. Market came down, and then it turned around and came right back up. So if I zoom in here on this chart, for those that are using market profile, okay, and using it the way we teach, I'm going to make it real nice and big for you to see here. What side of the market are traders on? Well, since this market broke back above the red line here, this was at 13.44, so it was about $4 ago. That's $400 to the good. The traders are on the long side. Now, here's the decision making as a trader. So we know when we're above the value area, the red line, we're bullish. But what about when we're inside? It doesn't mean that we're going to jump out of that trade. What we're going to do with our stop is this. Now, pay attention. This is important. We're going to, where is it here? There you go. We're going to put the stop opposite of the levels, and we trail it up when new levels form. So we're still long, but we're going to take that stop, and as these value areas move, there's no need to keep our stop way down here. We trail it up, and we're going to put a little bit below 13.45 and some change. What we're holding on to do, and we might see it happen live, is this market's quickly rising up towards our high value area. That's that red line. This is kind of like you can look at this as like support and resistance. So here's our resistance level, put an R here. But if we break through that, what was once resistance now becomes support. So you see how you basically now have a structure to know what direction to trade, what side of the market to eliminate, no longer short. You can see you've broken out of all that congestion. Remember market map? You can see you've broken outside of it, and then now you have a construct to manage your risk, trail your stops, and then have an awareness. Like when I sit and look at a chart like this, I was looking at charts earlier this morning here, I know that that's kind of the battle this market needs to have, but if it wins it, I'm going to feel good about it because the market's going to move vertically when we break outside our balance zones. Remember, it moves sideways and laterally when we're inside there. All right, okay, let's go look at the E-mini S&P. Big mover in the S&P here today. I was looking at this on a 10-minute chart earlier. Here's your 30-minute chart. I'm going to show you the chart I was looking at earlier on the 10. It was beautiful, beautiful trade. Here's a 10-minute chart. Again, big takeaway, all I want you to do, because again, this is not the product that I'm introducing you to. I am just building credibility with you here today, and I hope I'm doing a good job. Look at what the market does when we are above the top red line and we continue to reaffirm the bulls are in control. Look at this sell-off that happened here. This is for 20 points, by the way. Okay, that was this morning. A little bit after the open here, market broke, and I'm going to tell you exactly when that happened. And yes, these levels are there live. You can see they're on the hard right edge. But when that market closed below 2674, and that's the 840 Chicago bar, a little bit after they rang the bell, you knew as a TAS trader using these levels that guess what? Time to get out of that long if this is the time frame you're trading. Okay, market's back in balance now, and you can see it's navigating through our auction area. We're going to see if it fully explores all the way up to the 2670 area. But do you see again how you now have a mechanism to know what side of the market is likely to go, to know whether you're in balance or out of balance, and then you put your strategy around the levels. Okay, we're going to get to all your questions at the end. I know many of you have questions. Let me go to the crude, and then we're going to move into my next part of my presentations. Here's light sweet crude. Okay, light sweet crude, and what time frame? You want to look at 30 minutes? Okay, let me bring up the 30-minute. A couple of you want this chart, actually. That's great. Oh, I'm sorry, 15 minutes. Okay, here's the 30-minute. Let me bring up the 15-minute. You can, again, do it on any time frame you want. These are the indicators. So if you're trading light sweet crude, it's May contract 15-minute chart. Here's the trade. When that market this morning around 7:30 Chicago time broke above that top red line, you could see it was at 67.08. You're in a what I call a bullish stance. So the baton was passed, and this was a good trade coming into the morning as well on the short side. That was a great trade too, and here's how it goes down in practice. So short position when you close down below the bottom green line. Okay, put the stop across all three levels, and if you could stay above technical highs, that's great too. When new levels form, trail down the stop like a slinky at the top of the stairs. When there's a new step that appears, trail it down, and then you're going to ultimately get stopped out here. This is what you make on the short side. Look at this trade back here, a beautiful trade to the upside. And then let's talk a little bit about this trade, because there's a nice little lesson here. Okay, long directional bias this morning. Market comes up, it looks good, but look, we come down, and look, it finds support on the POC. So I want you to know that this happens time and time again. Markets move in and out of balance all day long. Out of balance, in balance. Doesn't mean you're jumping out of these trades. Remember, stop is going to stay here, down below a technical low, or here. If that's too much risk, you can put a stop inside here on the opposite side of, remember this POC, the blue line? When new levels form, and look, they did up here. Look at this is real time. This is your real time 24/7 blueprint for trading. You're going to take those stops wherever you started them, and now you're going to put them just below 67.25. You've effectively locked in a worst case scenario profit. You've taken your chips, barring a big slippage, gap down, or what have you, and those anomaly situations do happen. I want to be clear, but assuming we have normal markets, you have locked in a worst case scenario, and you're rolling with house money. It's still yours, but you're hanging in there for the fact that if this thing breaks again and out of balance above that 67, 66 level, which is right here, you're going to see that market start to head higher again. It'll move fast and vertical when we're outside the levels, outside of the balance area and value area, and then we tend to move sideways when we're inside, when we're in balance, okay? That's all this is, support, resistance, balance, or imbalance, okay? Okay, let's go, let's move along here, because I want to bring up now kind of your first introduction, and for some of you that didn't sit in my presentation before, of the scanner. And I'm going to tell you kind of how this thing came to be as I bring it up here. See, we have an Apple chart here, up here. So the Tazz Profile Scanner Plus is the name of the product. That's the full name, the Tazz Profile Scanner Plus. And why plus? Because it has so many features. So the goal of the scanner was to solve a problem. And this is many years ago. We created this over 3 years ago. So it's been in production and has improved in that time. But one of our big institutional customers that loves our market analytics for their it was prop trading group, a big bank that many of you probably know and I can't say for privacy reasons. They said, Tazz, we love your stuff. Our traders are doing well. We love your products. Thank you, thank you, thank you. But there's a problem. And we say, my goodness, what's the problem? They said, we're getting very frustrated at the end of the day because when we're spending time looking on charts A, B, and C, there's great opportunities that we're missing on X, Y, Z. And we said, gosh, it is a problem. So you're doing well when you happen to be on the charts with our product that are moving, but you're missing all these other opportunities. And banks that trade, they're not in the business of missing opportunities if they can avoid it. So we created the scanner, the initial version of what you see here, and it looked different at the time. It certainly has come a really long way, and we're super proud of it. But it gives you now a dashboard where you can look at the S&P 500 stocks and NASDAQ. That's the coverage we have on the stocks, but we also have futures and forex in here. And you can bring up some controls up here, okay? So this gives you some different mechanisms to sort. Now let me just give you kind of a quick case study example here in kind of hyper fast fashion because of the limited time we have. So we have all the stocks listed here, and you could choose what you want to have listed here. You can create your own custom list. Over here on the left, look at, I've got a Steve list of some of my favorite markets. You can create your own list for the day of the week, the style of trading, market sector, whatever you want. But the sorts is where it's at. This is what saves you time. So market's having a tough go here early on. So let's say we want to find those stocks that are bullish big picture. So see where it says weekly sort. If I click above, it's going to only now show me all of these instruments that have a green colored weekly column. If I click it again for daily, 4 hour, and 60 right here, I've narrowed it down. If I go like this here, I've narrowed it down to a manageable list of what you see here. Again, it's a sea of green on about a dozen stocks. Now these can be my candidates I'm going to focus on. So if I click APA up here on the top, look at what I get first and foremost. Remember I said you don't need a host platform and we're going to give you those all important levels? Well, I meant it. Look what you see here. Look at this chart. This is a daily chart over here, and look at the what you have in terms of decision here. Look, this is when we're above that top red line. So we know to be bullish, bullish, bullish. We continue to be above that line. Take the stop, trail it behind the levels. Down in the bottom right is what's called the landscape chart. Okay, now this is for APA, just this example right now. And you can see down here, this yellow line gives you where the market is here. This is a yellow horizontal line. And then what you get all in one chart, and this is proprietary to us, is you get those all-important balance value areas or fair auctions on these 4 critical time frames: weekly, daily, 4 hour, and 60. And remember the rules of engagement. When the market is above the top red line and we're out of balance, what side of the market do we trade, long or short? Type it in the chat box. You got it. Buy, baby, buy. Right. So this one, this particular instrument is bullish across 4 time frames. It's easy to see, and then you have an awareness of these levels because you can use these levels for stops. So you can go in and you can look at any of these charts right here, and you can make these bigger. By the way, I'm on a limited viewing screen here for you, but look at here, the 60-minute time horizon, look where the market is. And that's why if you look over here in this box, see where it's green and it says the number 4 for the 60-minute time frame? Follow me here, okay? Right there. That's counting 4 consecutive bars we've closed above the balance area. So how many days have we been bullish? If you look at it right there, 14, green color cell, bullish for 14 consecutive days we've stayed out of balance. That's a big deal. Let's say we want to look for the bearish candidates. Who trades on the short side? Let's go to a futures board, okay? Here's the futures board now. And let's bring up our controls. Let's go find some bears now, okay? Below. Actually, real quickly, I narrowed it down to the Swiss. It's the ugliest of the bunch. Okay, this is the Swiss now. I click this, and I'm going to open it up here, and here we go. This is the daily time frame, and how many of you trade currency futures or forex? How powerful could it have been, or how much money could have you saved or made if you'd have known through our simple Tazz box levels integrated in the scanner that you should be on the short side? And using those same levels, just remember I said slinky stop, trail it down, and let the market keep on going. This is powerful stuff. It's all right in here. Someone wants to take a look at the forex market. We do have the major forex ones here as well. Let's go find JPY US dollar. Here it is. Here's the hourly time frame right now. So I brought it up. Here you go. Look at how the market. See how it's really clear to see. This is for Randy. Look at how you can see we've been in balance for a long time, haven't we? We've been in balance for quite a long time. So it's very interesting to see where we are, and then you can see exactly where you are on this. If I click the 60-minute time frame, there we go. Let's talk through this. Okay, this is from Randy in attendance here. You wanted to look at the JPY versus US dollar. So it's the red cell number 1, and that number 1 is in the first bar closing below the low value area. Now previously, what side of the market were you trading? Long, right? Long, 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 and trailing the stop behind. So you made some money hypothetically here on the upside, but the market is starting to turn. So you can also, so when you look at the landscape view, look at it right here. See that yellow line? What's really cool about this, think about what you'd have to do to get this same information. You'd have to actually bring up 4 separate charts, wouldn't you? But with the landscape view right here, you can just quickly and easily see exactly where the market is all in one place. So what do we know? We're in balance on the weekly. Okay, look, we're in balance. We're below the red, above the green. We're slightly above on the daily. So we're bullish there, and that's why look, you got green color cells. We're, again, slightly bearish on the 60. So how would I use this information? This is something I'm going to be teaching. I'm going to tease you about this in a little bit next Monday, exclusively for you. But if we clear that top red line on the 60-minute time frame, you bet this market's got some great potential back to the upside. Okay, but we're not there yet. So that's why we're seeing a little pressure on this chart right now, is because on the 60-minute time frame, the shorter term time frame, it's getting pressure from these resistance levels identified by that balance area on the 60-minute time horizon. So you see how this works? And again, you can do this on futures. I got a futures, forex board, and then we have S&P 500 and NASDAQ here. Other things that I'm just going to cover very briefly, and I want to, is market breadth. Okay, so I'm clicking this here, and this is for the S&P 500. Market breadth essentially gives you it's not a bad test from the doctor's office. When you look at this, it kind of scared me when I first saw it from our team. But if I zoom it in real big here, this is essentially what it's called market internals. And what this is essentially doing is it is constantly tracking the component parts of, in this case, the S&P 500, and it's telling you how many are bullish, 105, how many are bearish, 144, and then how many are neutral inside, 255. And then it gives you a market cap weighted number, an output there. So if you look over here, see how you have the blue line, the tallest of the bunch over on the right? It means most of the stocks in the S&P 500 on this daily time frame, and you can use these same 4 time frames, weekly, daily, 4 hour, and 60. These are the most important time frames, even if you're trading shorter term. Most of them are in balance, but you're going to see sometimes, like look what happened here. Look at how bearish the market was during that time. The S&P, look at it going down. This is a simple line chart down below. Down, down, down. And look, the red line's going up, up, up. So that's exactly what you'd expect. When the red line grows, it means more and more candidates in the S&P 500 are turning bearish. And if you were to look at them on a daily time frame with our levels, you'd see a whole bunch of those stocks down below our balance areas. Okay? Down, down, down. And again, if you want to find out what those ones are, that's where you go into the scanning feature. Okay, so this gives you kind of a summary output of the tide of the market. That's really essentially what this is. It shows you when the tides are turning. So you could see this, the green line starting to creep up on the daily time frame. And look, the market started to creep up on the daily. We can switch it to the 1 hour, and we're going to have a different chart. On the 1 hour, again, down below, this is a chart here that's showing you the market creeping up, up, up. And look what line is above the others, the green. It's kind of holding its own. It's fighting off the bears. And it makes it, again, gives you that directional bias. And you can get it right down to the number count. The reality is that sometimes these markets hit what we call extremes. And this is like, look back in time here on the 60-minute time frame right here. So look at how high. At one point back here, 93% of the stocks in the S&P 500, this is early April 2nd, okay, middle of the day, around lunchtime, 93% over 9 out of 10 stocks were bearish below our levels. And look what the market did. Down, 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 down. Now, when we get into extreme situations, we teach some techniques. Techniques that the rubber band can only stretch so far. And let me tell you, give you a little teaser what that is. So when the green line here starts creeping up here, and you get that crossover, that's a good signal that the bulls have taken over the bears and they're winning that war. Look what the market does. Up, 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 as that green line emerges higher. So anyways, that's called market breadth. It's built within the product. It's very cool. Okay, we also have an ETF grid here. Okay, this allows you to kind of rank the most bullish or bearish of the ETFs, and that's built in here. It's a cool little dashboard, and you can dive into, again, market breadth of the component parts. We need when we do market breadth, or market internals. We need it to be an index or something that has components. All right, everybody with me? Really cool in here, and I want to cover this just for a couple minutes because the best part is still yet to come. This is what's called the matrix signal finder, okay? And this allows you over here to take a look at some explicit ideas that come in, okay? And over here, it's a little hard to see on my minimized screen here, but this gives you some ideas. In the top right, here we have a top 10 list. The top 5 bullish candidates are listed at the top. The top 5, or we should call it the bottom 5, most bearish candidates are listed here as well. Now what you get over here, and I'm going to show you some of the different things included. You got AEP at the top. It gives you a breakdown pattern. Make no mistake about this. This is an algo-derived explicit trade idea. You still have to filter whether it's within your risk tolerance, of course, and you should, but it gives you the idea. So I'm going to click AEP breakdown mode and it says W short. See that? It means based on a weekly time frame. Okay, on a weekly time frame, it's giving you a bear, and so it brings up the weekly chart. It's showing you this. Okay, beta 50 as I scroll this over. You have a normal viewing screen here. You don't have to scroll, by the way. You can see it's all in one place, just so you know. So I'm going to open this up a little bit. But as you look at beta 50, you can see it's 0.2. So beta means at what speed is the market, that particular instrument, moving with the index over the last 50 days. Okay, so if it's 1.0, it's moving perfectly 100% in the direction of what the index has for the last 50 days. If it's negative 1.0, it would be moving exactly opposite at the same pace going the other way. Okay, so it gives you a gauge of that. Then TVP, this is going to give you trade validation point. That's an entry. Okay, we call it a different acronym here at Tazz. So 6692 TIP, trade invalidation point. This is your stop. Okay, so it's a short. That's why the stop's higher. TEP, trade expiration point. That's the target. Okay, so 6692 proposed short side entry with a stop at 6887, target 6432, gives you a trap. Okay, this actually is an acronym for risk reward. Nearly 2-to-1 risk reward. Now you say, hey, that doesn't excite me. Click this, and you can sort through these and get the bigger one. Here's a 9-to-1. Let's go look at that. What's that 9-to-1? I'm going to go back here in time. BRKB right here. Also a weekly short. Look at it. You could see the breakdown. Does everyone see that on the chart? So when you click the chart, what's really great about this is you get the idea here and the bullish or bearish signal. You get the Y with the type of setup it is. You get the time frame it's based on, and then you click on it and it shows you the chart. So you can, if you're like me, I don't take anyone's word for anything. I'll hear people, and I talk to a huge community of traders in Chicago. Okay, I do these social things all the time, and everyone's telling about their great trades. I'll listen, and then I'll go look at the charts. Everyone in here, in attendance here, in the encore session, you're here because you don't accept just following what someone tells you to do, right? Have you been down that road before and you say, hey, look, if I'm going to lose money, I can stomach it better if I'm the one that lost it. And if I make money, I get to pat myself on the back and I get to replicate that process over and over again instead of it be some secret black box or some secret money manager that's not going to tell me what he's really doing, so I have to keep paying him his management fees. That's the beauty of this process. Once you learn this method and learn how to use the scanner, you are using this as an opportunity finder, and you go find opportunity. Be able to trade relatively cheap at most brokerages right now. You don't got to pay management fees. You don't have to pay an incentive on profits. You don't got to give up 20 to 25% of the profits like some money managers will do. But you got to do the work. You got to learn this stuff. All right, so this gives you everything you need. There's some other stats built in here too. As you keep going further around, we have a Q score. Put your cursor on anything in the scanner, and it's pretty self-intuitive. It explains what everything is. Okay. So, anyways, that's the matrix feature. It's an idea generation machine. If you bring down the ribbon controls, you can really put the buckle down. If I squeeze this over, it's only going to show me the highest risk reward trades. So if I go like this, we're going to see only these. Look at these 6, 7, and 8-to-1 risk rewards. So you can control that with that little lever there. You also, let's say you're a long-only stock trader, you can get rid of looking at the short side trades. So you can make it be very focused on, let's say, breakout-only longs. because that's your style. You like breakouts, you like those fast-moving markets, and you want big picture only. Again, you can deselect or select what you want to cater this thing to work for you. That's really what you're doing. This is your trader's companion. This is your trading assistant. You're still the head trader who's going to pull the trigger when the opportunity is ripe, but this does the heavy lifting for you and saves you time. All right, so awesome. Okay, so I'm going to cover. I do want to cover one more chart because someone's been very patient asking for the December or the wheat here. I don't have December up here, but I do have a wheat. I believe I got July wheat, so to give you the idea here. On what time horizon do you want to look at? By the way, here's daily. So here's your daily chart. Again, just giving you affirmation. This is not the product that I'm introducing you to today. This is what's under the hood. This is that market profile that drives the scanner. So here's daily, and this is for Scott. Thanks for sitting in. But you can see the big takeaway when I show you these charts is the fact that, again, markets will move in the direction of the breakout outside our proprietary levels. We move short, we move long, and look, we're moving short again. Right there on a daily time frame, 491 3/4. It's happening now. This is when you should be getting out of those long positions, and you're starting to, by the end of the day today, you close down below there, Scott, down below 491 3/4. Again, the baton has been passed right back from the bulls to the bears. On every single chart, traders, listen up. Trading does not have to be so difficult. There's a baton, okay? Any marathon runners or steeplechase people? If you ever see me, so here's the deal. So someone always has control of the market, either the bulls or the bears. This allows you to see who that is, and that baton gets passed back and forth. And now with Tazz, you know, and you base that based upon where we are relative to the levels. Who's in the mud pit? Okay. Questions are coming in, and I'm going to address all these. Thank you so much. So let me get on to the next part of my presentation. This is where it gets good, okay? Anybody excited about what they see here? I need to see some Ys. I'm sitting in a hotel room at the Fairmont in San Jose. Beautiful hotel, by the way. Holy cow. You walk in here, they start giving you a back massage, and they give you a glass of wine, and the room service fantastic. Holy cow. Love this town. It's awesome. Right across from the Tech Museum here, which I wish I could say I have time to get over there. But all right. So let's keep moving along here, because if I've done my job correctly, you're excited about what you saw here today, right? So here's the matrix. Find ideas fast in the matrix. I want to show you something that's important, because I'm going to give you a little teaser of this, because this plays into a value proposition that I want you to take advantage of here today. Okay, so I'm going to bring up something. Everybody can see my screen up here. Okay, everyone should be able to see this. Okay, let me get rid of this so we can maximize it a little bit. There we go. Okay, so I introduce you to a place I spend some time. It's called the We Trade Desk. Now, this is a chat room I started not that long ago, believe it or not. I think it was November last year. You can see we've got 462 members in here, and these folks are, not all online at the same time, but again, you can see, look at all these people here. All these people are off doing their day jobs and stuff, but again, those in green here at the top, they're actively online. They're sharing information. This is a chat room, but I like to view it more like a really cool online community, like an online country club for market profile lovers, people that are using products like the scanner, which I hope you do here later today. You could come in and share charts. That's me. I'm life is good, because I'm a big believer that is true, most days anyway. And look, I just shared a chart. This is a different utility that we have as well, but I was talking about it. We're sharing ideas. I'm going to take a quick little peek in one of my favorite rooms, the market profile room. And here's a dialogue of traders. Look at sharing charts. These are traders. This is not my chart. This is one of our longtime users, dear friend of ours. And again, you go through here and people are sharing information. These are actual customers. So this is not me cherry picking the best chart and saying nah. If you go through here, you're going to read through this, and people are talking about what's going on. You know, how to handle challenging charts with the products. Look at someone's adding GLD right now. And again, there's normal chatter that goes on here. Look, this is something I started, and I didn't expect 500 people to get that excited about this in just a few months' time, but we're growing this thing, and I love it. There's lots of cool little widgets and stuff in here, like market calendars and quotes, delay quotes, of course. This isn't going to replace your charting or anything like that. Index quotes, some neat little features like this thing here called, I like this, is called the data flash. And if I open this up here, it allows you, when it's around report time, you could fill out this little thing here and says, if the market does this or the report does that, then give me an alert and tell me. And so it tells you what's coming up, and it allows you to, again, to set some alerts to structure kind of your trading preparation, okay? Very cool. I'm going to get rid of that there. And you can open up, get rid of these widgets if you don't want them. But it's very awesome. Like I can come in here right now and I can say, hello world. It's cool. And they're probably going to be like, what the heck are you talking about? Hello world. They don't know I'm doing a presentation right now. But this is something that is important to me. And it's something that, as you'll soon see, I'm willing to allow you access to, because I don't want you to get a great product like the scanner and then kind of feel like you're on your own to figure this thing out by yourself. I want you to be able to come in and say, hey, I'm scanning, and when you find some ideas, put up a screenshot and say, hey, you guys seeing this? And all of you can, from TradeThirsty, can come on in there, and you can have your own community in there. There's the free traders lounge in there. Is a great place to come and say, hey, who else is using the scanner? What are you looking at today? And talk. And all of a sudden, trading's not so lonely, right? So let's go on over into my next slide. Here's our learning process. Okay, it's really important for me to set expectations with you. And as I said a couple days ago when I was in Sacramento doing this same presentation, you've already checked off number one. Step one of this process is learn what this is all about, and make a decision today of if this makes sense to you, if you think this can help you and save you time and add structure to your decision. You don't have to forget everything you've learned, traders. And some of you that have been trading maybe even longer than me, you've learned things, sometimes the hard way, and you've paid too much tuition to the market. Well, it's time to get it back, and a whole lot more. You've done the webinar today, so you check that one off the list. Step one is done. The next step is get the scanner. You need the tools, because if you don't get the scanner today, this is where it stops for you. And you learned a little bit about market profile, and that's about it. And you're going to go on and have a great weekend, and of course we'll always wish you the best of luck. And as we say at Tazz Market Profile, we appreciate you probably taking the other side of our trades many times, so we thank you for the liquidity. I shouldn't say that, that's not very nice, but it's true. The next step here is going to be a video course. Okay, now this is a video course that we sell for $500 typically. Literally, we sell a lot of it, a lot of that course, I'll tell you. $500. It's an awesome course that dives in really deep for 6 hours into what market profile is, the structure of it, all of the things that I showed you, and a whole lot more. Again, a 6-hour presentation of that very basic market profile introduction that I gave you here today. Okay, so the reality is you need to take that video course. And as you're soon going to learn, I might, if you twist my arm, throw it in for free. Okay, step 4 is you're going to keep coming to monthly TradeThirsty coaching calls. This is something we agreed to do with Jeanette because she's a great negotiator and a dear friend of ours. She said, you know what, it'd be great if once a month we could all get together, those that use this product, and we can have an interactive Q&A session. We're going to do that every month, myself, John, or both of us, depending on our schedules, and look forward to that very next one. And then the peer chat room. Again, this is something I started just a few months ago. Again, 500 people in a few months. Where are we going to be in 6 months? Where are we going to be at this time next year? That community is going to thrive. It's going to grow. The dialogues about finding opportunities excites me. There's also a really cool mobile app too for those of you that use Google Play or iTunes on your iPhones. There's a way you can basically keep connected and get notifications when someone's posting a new idea to make you aware of it. And really, you know, kind of my mantra is, let's do this together. Let's trade better together, and we can do it, okay? So that's the process, and the beautiful thing is you get it all right here in the package. So this is a webinar-only offer. This is the encore, folks, so this is when it ends. I talked to the folks at TradeThirsty. They said this offer is good through midnight tonight, okay, because there was 2 chances at this. There was one 2 days ago, and there's one today. The encore is it, I will assure you. At midnight tonight, this offer comes to a screeching halt. I don't encourage you to test it. So here's what you get in the Tazz Scanner and Learning Bundle. This is a quarterly plan. So when you look at these numbers, I want you to appreciate what's inside of it. You get the Tazz profile scanner, which if you were to subscribe for it all on its own, it'd be $291. But we're throwing in the video course for $500. We're also throwing in my interactive chat room. That's something that runs $441. The TradeThirsty online resource center, I've been in there. It's awesome. There's a bunch of videos, manuals, video playlists, everything you need to kind of dive in and fast track your learning right away. You can start doing that this weekend. Then you'll see there's the monthly coaching calls. That's included. And then this is something that I announced in the last presentation 2 days ago. And I said, I'm going to be, for anybody that signs up on the offer, I'm going to do a jumpstart session. And that's Monday, by the way. It's going to be at 11:30 Eastern time. That's Monday. So I don't want you to have to wait to start learning how to make the most out of this tool. So on Monday, that's the busiest part of my day, but it's one of the most exciting times to be looking at the markets. But I'm going to give you an hour of my time to fast track and do a deep dive into the scanner. And it's going to be, there's no sales pitch there because you're already going to be a customer by then. And we're going to look at this product together. We're going to take all your questions. We're going to go through some sample scenarios and strategy. And I can guarantee it'll be worth your time to be in that thing, okay? You end up saving, if you do the math on this, and we'll do it for you, you save over $900 today. That's a 75% discount. I mean, my goodness, if we go any cheaper, we're going to go out of business, and that's not good for anybody. So $297 a quarter, folks. Let me ask you a question. How much are you risking every trade you make? It's one of my favorite things. I tend to fall between about $500 and $1,500, if anybody cares. How much do you guys risk per trade? I'm seeing 200. Type it in. Type it in the chat box. This helps me. 500, 150, 1,000, 1%, 750, 200, 100, $50. Hey, that's fine. Here's the thing. For those of you that said some smaller risk numbers, there's nothing wrong with that at all. Let me tell you, that's prudent. How many times do you do that every month? Now the numbers get staggering. You know, for the person that says, "Hey, I only risk $200 a month." Oh, but I trade 10 times a month. You actually put $2,000 at risk a month. Those of you that said higher numbers and trade more often, you might be risking $10, $20, $30, $40, $50,000 a month. And that's why when we talk about $297, that's under $100 a month, just so you know when you break it down. I can't wrap my head around somebody saying, you know what, I'm just going to keep doing what I'm doing. And I'm going to venture to guess, anybody that's still sitting in here in this webinar, and most of you are, you're not sitting in on this webinar because you got nothing to do. It's because you do know that there's room for improvement. And there is. That's the good news through tools like this. So for under the equivalent of $100 a month, that's 2 points in the S&P. 2 measly points. At $297 a quarter, you're going to get all of what you see here. You get the deal down below. Here's the URL, TradeThirsty.com/profile. TradeThirsty.com/profile. I'm going to try and circle that here for you folks. You need to be taking note of this if you're not already going there. That's the key. This is where I'm going to do interactive Q&A. I'm going to keep this chart up here. This expires at midnight, yes. And you'll miss my Monday jumpstart session. That's the reason enough. And so the perfect scenario, if I'm on the other side of the screen, is the following. Ahead of the weekend here, you buy the package. You start watching the videos in the Resource Center at TradeThirsty to prepare yourself, to give yourself some baseline knowledge before my Monday jumpstart session. Okay? You're going to have the tool. You can start kind of poking and playing it, you pushing the buttons. You're not going to know everything in 1 or 2 days. Bring the questions on Monday. We're going to get you fast tracked. And then again, you got the perpetual learning. You're going to come into the chat room. Okay, I do screen shares on Tuesday, Wednesday, and Thursdays. Most weeks, okay, if I'm not traveling. So I do some live interactive stuff. It's great. And you can communicate with each other. Some of you are going to probably eventually be friends of sorts. That's what a community is all about. Like-minded traders using like or similar tools, sharing information, and growing. Okay, now I'm going to hit you. All these questions are coming in. I'm going to do my best. Okay, in the meantime, get signed up, there's the link down below, TradeThirsty.com/profile. I'm going to go through, and it's my goal to address as many of these questions as I can, okay? Getting some question about, does Ace Trades use your stuff? I have no idea. Can you adjust the time frames to other time frames? The scanner has weekly, daily, 4 hour, and 60. It uses a Windows-based system, so you will need a PC, laptop, or something that runs on Windows. For those of you that are on Macs, hey, I like those too at home. The trading community just does not embrace them in the same way that the Windows environment does. So we do not have a Mac-specific version, but you can run a Windows Parallels or virtual Windows, and the product will work just fine. But you got to get that set up on your side. So Windows environment. Other questions, does it show new signals? Very new signal, when the very new signal is almost done, yes, it updates the signals. I'm talking about the matrix, it looks like. How does it work for options? Great question. This is from Pete. So you're going to bring up, when you are looking to do option plays, remember, you're going to bring up the scanner on the underlying instrument that you want to trade options with, and that's going to help you formulate your perspective. Again, depending on the time frame for your options trades, you can look at daily and weeklies if you're long term. If you're a little bit shorter term, maybe you're doing some swing time horizon option stuff in for a week, 3 to 5 days. Again, you can look at those 4 hour and 60-minute time horizons. Good question. Other questions coming in here. What platform is this for? It is its own platform. So let me click it again here very quickly here. This is its own standalone platform. When you install this, you get everything you see here, all these buttons and matrix, market breadths, and all of the charts that you see here, you get. The landscape chart down below here, the Tazz says, which is really cool. I didn't even talk about that. Over on the right, this is like our robo-advisory. It essentially gives you analysis. It's our algorithm talking to you in English, and it generates a 60-second refresh and updates that information, so it's never out of date. It's always relevant, and it explains what the perspective is. So let me click on this over here. I'm looking at AAL, and it says weekly long-term view. I'm looking in the bottom right where my cursor is here, and it's talking to you. Weekly closes below 50.18 a share are very positive for the long-term downtrend and should be considered a breakout pattern. Be on the lookout for new weekly profiles attempting to form. This will signify a new long-term support. You get the idea, blah, blah, blah. Over 400 permutations we built into this thing. So remember when I said when we created the scanner, its job was to take information that around the world is relied upon every single day by institutional traders. Remember, hedge funds, banks, money managers, brokers, they use the information that's under the hood. TAS market profile, the dynamic profile in boxes. And then we took that information and we created this really awesome interface here that gives you charts, the levels, the landscape view, robo commentary, market breadth, and really awesome time-saving sorting utilities, okay? So let's go to futures. Any futures traders here? Click, 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 click. In 2 seconds, I was able to narrow this down to XBZ. Okay, so again, you can do this for any market and time frame you want. Click, click, click. There you go. 2 of the 4 sorts here. You can narrow it down to corn, crude oil. You got cotton, Canadian, the pound. And then you see how it's easy to see. On the weekly and daily, these are all bullish. But look at the tides are turning on corn on the 4 hour and 60 when you put your cursor over there. So let's go look at this here. We're looking at corn. Let me open this up. And look, you could see that. So do you see how everything parallels to the information? So look at corn. Weekly and daily are bullish, 4 hour and 60 bearish. And that's what you see. Bullish here, bearish turning on the short term. We'll see what wins out. And you see the markets right in between. So that everything is included in the package is right there. No data feed required. Yes, it does forex. There's a forex board as well. You can install this on more than one computer. You can only use it on one at a time. Good question, Jim. If I enroll, can I start making money on Tuesday? That's going to be up to you, but you'll have the tools to do it. Bob says, where does the data come from? It's our internal database. What we're projecting there, this is not to replace your brokerage or your quote platform. Make no mistake about it. This is our tool that pulls in and derives our proprietary levels. That's why there's no data feed. This pulls from our own internal database. This is not a quote providing tool. This is not going to replace your need for an execution platform per se. It's a tool that gives you the information you need to make a wise decision. So no data is required, no host platform is required. It takes about 60 seconds to 90 seconds to install the software. When you make your purchase, you're going to get a login. You'll log in on it. If you're like me, you can install the product on more than one computer. I've got it on my travel mobile trading setup here today, of course. But when I go home, and I've got a couple satellite offices as well, I've got it installed on those machines as well. You can't be logged in to all of them at the same time. Of course, there'd be probably abuse with that, but you can use it on different machines at different times. Great questions. What other questions do you have? You can set up your own custom list. It's super quick and easy to do that. So let's say you already have a basket of stocks that you want to trade. I spent a good bit of time in the commodities sector, so I have my favorite commodities. There's about 7 or 8 markets that I really tend to focus on, so I have a list called Steve. How original. Rush is asking, how do I use it with Thinkorswim? You don't use it with Thinkorswim. Again, it's a standalone piece of software. You do not need a host platform. You do not need Thinkorswim. You certainly can, and if you have a brokerage account there, feel free to push the button on the strategies there and deploy your trades, but it does not need to integrate with Thinkorswim. It stands on its own 2 feet. So there's no integration for you to have to fuss with. There's none of that. My opinion is this. Look, I've been around the trading business a long time in a variety of capacities, from C-level to into the trenches with the traders. That's the reality. Now I spend most of my time, as you can probably gather, teaching traders on the education side, the method, the tools. So, you know, I'm kind of like a trader mechanic. I fix traders. I think that's the kind of the slogan my marketing team's running with right now. This guy fixes traders, and that's, you know, it's really pretty much what I do. Good question coming in. Can I execute an order through Tazz? No, we're not a brokerage house. We're not connected to the brokerages. So you use our utility to make the decision, to find the strategy, to know what side of the market to trade, and then you execute it on your preferred brokerage. You've been a fantastic audience. There's only one thing left to do, and that's your job. Head on over to TradeThirsty.com/profile. TradeThirsty.com/profile. My goodness. I think anyone in attendance here for $297, again, 3 months access. It's an automatic recurring. So if your worst case scenario is you try it and you decide after 3 months it's not right for you, you can cancel by notifying the folks at TradeThirsty. I don't think that'll be the case, but if your biggest risk is $297, I think we all can agree in 3 months you will probably make a trade you regret. That costs a heck of a lot more than that if you're not empowered with the information. Jim's just kind of clarifying the terms, and I'm glad you are. It's $297 a quarter, cancel anytime. Yes, you know, give adequate notice before your auto renewal, of course. Our policy is probably very similar to TradeThirsty's, which is, you know, no after the fact stuff, because these things are automated billing situations. So put on your calendar 2.5 months from now, I'd say, and if it's working out for you, let the good times roll. If it's not, the folks over at TradeThirsty simply require an email to cancel. So you're not locked into a long-term contract or anything. TradeThirsty does a fine job of getting us in front of traders like you. We're a separate company, Tazz Market Profile. We provide the product. They created just an awesome mechanism for you to log in and get the utilities, learn. So they service your billing and all that, and we service the product. If you have any tech support needs, we have, when you sign up, there's a place on the TradeThirsty website. They'll tell you where you need to go to create a support ticket, and we have a team here that's ready, willing, and able to help you through any technical matters. This product has very little technical issues that we encounter. Probably the least of any of our products, to be exact. We have very, very few technical issues. The install is quick and light. Rush is saying, thanks for the excellent product. Just wondering how long it would take for me to use it efficiently and productively. Again, these are, yeah, I'd love to give you some kind of a guarantee of when that is. It's, you know, everything in trading is still a learning process. And, you know, I bought a new car for my wife. I still haven't figured out where the cruise control is. So it's one of those things where it's like, you know, just it takes time. You know, you got to use this and start figuring out how you're going to put it into your filtering mechanism, making it a part of your decision making. Okay, we're not taking that power away from you, we're empowering it with information. I'd say most people, if you're looking for less of an ambiguous answer than that, I say it takes most people a few weeks, you know, kind of seeing how it works in live markets, coming to some of the training sessions and all that good stuff. And then the light bulb will start going off, like this presentation start, and then you'll have a big bright light bulb over your head. Price protection, what does that mean? That's a great question. So price protection means that price is not going up. Okay, many of our products have become more expensive over time. The laws of supply and demand. And I'd be more than happy to bring up crude oil. Okay, let me bring up crude oil. What I generally say, you know, we'll do another one here now, but what I generally will say is that for where we are price point with this, get it, here's your crude. You can see where we are. Look where the market is actually in the bull camp. That's what I've clicked right here now. Market's up here, and look where we are bullish on the weekly, daily. That's the daily chart we're looking at right now. See, we're above the value area. Pressed up on the 240 and the 60 is bullish. Let's go look at that weekly. So again, you'd be long, 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 long on the daily. We're breaking long in breakout mode up above here as well. 60-minute chart. You're above the balance area on the 60. And then all that kind of ties into the color coding scheme you see over here on the dashboard. Great question. So I hope that, so the name of the game here at the end of the day is you get the product, and we're all going to use it a little bit differently because we have different interests, time frames, and so forth, but the method and the rules are the same. So the question is, what are the chat room hours? It's open 24/7. You can go in there. You know, obviously in the overnight it gets quiet. You know, most people trade for a period of time during the day, and that's when they're most engaged, and then they tend to life and move on, of course. But it is, you can go in there anytime. In reality, it just tends to be most active during the day, and especially active when I'm doing screen shares in there. My next one will be on Tuesday. Next Tuesday is my next live screen share. That's in the chat room. The question I'm getting from Alex is, what time is the webinar for TradeThirsty? That is at 11:30 Eastern time in the morning, 10:30 Chicago, and 8:30 Pacific. And I believe they will record that and put that in the resource center. So if you can't sit in live, don't have that hold you back. They'll put that in the resource center for you. That's all I got, folks. You guys were a great audience. I appreciate you spending time with me on this fine Friday. I've got some things to tend to here, you know, and some meetings to head off to, but it's been a great week. It's been a fantastic week of trading with the Tazz market profile method. I really do hope you use this as your opportunity to get introduced to the analytics that we've worked our tails off to create for traders just like you, and join our thousands of other customers Thousands, many, many thousands of customers. We have in the institutional world as well as independents like you, and we look forward to seeing you in our community soon. Get signed up before midnight tonight. I'm going to show you one last time here before I bid you farewell. You get the special at TradeThirsty.com/profile to get the deal.